Jayesh Mehta, Country Treasurer with Bank of America, is joining us right now. Jayesh, good morning. Good to have you with us here. Thanks very much. I'm sure you've been following news since yesterday evening with this Mauritius tax treaty business. Any thoughts to begin with?
I think they've given enough time, and I think they are just trying to get it rationalized. So most probably it's going to affect short-term capital gains, and I think initial euphoria, and then people will get used to it. So I don't see that as a much big impact.
Fair enough. What are you picking up in terms of demand for credit, investments, just generally the mood out there from people that you speak with, Jayesh? I mean, many recently who've come on the show have said that, well, things are on the verge of a turnaround. Look at the fourth quarter earnings. So far, what we've gotten all seem upbeat. Mostly all seem better than expectation. Where do you stand?
Yeah. So I think, I think there is definitely all said and done. We may not have that big bang reforms and stuff like that, headline catching reforms. That were not required, right? And there are a lot of things happening on the ground. And of course, when you are going on course correction, there'll be some pain also. In terms of, borrowing, bank credit and all that, I think CapEx is still a long time to go, private sector CapEx. Public spending is definitely happening, road, of course, is known. Little bit momentum is picking on railways, and we see some other small offshoots coming in. So I think that will be coming definitely from the government spending side, and that has got momentum, but on a select sector, right? So from that perspective, that's fine. I think our service sector is anyway still strong, and it continues to be strong. And basically, what's missing out is new project, new capex on private sector side. I think it's not only India; it's also the globe, and I think that's gonna take some time. I would say at least minimum a year plus, right? So from that perspective, it's okay. I won't be too much concerned, because you have some excess capacities with the existing manufacturers. Let that go up, and that should be good. But we are definitely much better than what the world looks like, right? So as of today, the world is definitely in a very much deflationary situation. It is going to be very difficult for that to come off there, because a lot of structural things also happening globally, right? So I think for that to come off is not going to be that easy. And of course, this year we have a lot of event starting with Brexit, and then we have US elections. So you will have things coming in on and off in between. There will be excitement. People have kind of become very news trigger happy, right? So every news, every thing people want to react. I'm talking everywhere, including global markets, not only India. So from that perspective, yes. But otherwise, I think it's quite okay. I think we are fine on a fine level. In India, I think we are doing. If you look at the macro, if you look at what the government's doing, it's last time we talked about, right? Corruption is getting quite controlled, at least at the political level, right? So that's kind of is really a big boom, right? So that's happening. They are looking at widening the tax net. They are getting after it. One of the reasons currency in circulation, that's what people say, is become very difficult now to wash, launder money, whatever it is, right? So from that perspective, so that will create short-term pains, but from a longer-term perspective, it's a pretty good thing for India.
Fair enough. I just want you to come in on the currency picture as well. Increasingly, I'm sure you've also read articles linking what happens to the currency and generally the market as well, with whether Dr. Raghuram Rajan gets another term as RBI governor or not. I mean, at a function recently over the last weekend, he was asked the question. He said, well, I haven't heard anything. If I get to hear something, I'll let you know. So he was obviously non-committal about it. I spoke with Christopher Wood from CLSA yesterday, and he said that if he doesn't get an extension, the rupee will weaken. Bonds will see the same reaction. Stock markets could rally a bit because, stock market investors believe that he's kept liquidity too tight, rightly or wrongly. Where do you stand in this entire issue? It's getting a lot of traction.
I think there's two different things. So as I said, people have become very headline trigger happy. We have institutions which work very well. Of course, the bunching up of the FCNRB maturity and the changes, plus one more deputy governor also might, we have to see what happens to him. So I think that continuity pattern, purely because of the $34 billion, the deposit maturing $26 billion. So I think all of them is getting bunched up. Of course, the final call, nobody knows about it, but either way, it's fine. But most important thing is, I would say, on the liquidity side, yes, it's been promised that we'll be near neutral, but we need to see that happening. Even as of today, we are 90,000 crores short. It's going to take time. That's what he said after the policy. But that's when, once we see liquidity in the system, and that's when we'll see what traction happens, right? So I think right now it's more on hope, but I think the bonds could, once the liquidity comes in hand, which our estimate says we should see some positive liquidity in August. Once that comes in, bond could react positively. As far as currency is concerned, yes, there will be headline triggers, there will be headline movements, but I think we are on a quite comfortable zone at this juncture. The only thing is, as we go to US election, the dollar might strengthen and but we'll still outperform other emerging markets. So I think the traction on currency is also pretty good. On terms of appreciation of currency, as of right now, even RBI is buying at every lower level. So that may not happen dramatically, but I don't see it going much higher, even say maybe in next 1 month or 15 days, unless something changes globally. But doesn't look like crossing 67 quarter or so. So we are more or less, we are quite stable in terms of currency. In terms of bond, also we are quite stable at this juncture. Maybe we'll be range bound for a couple of months. It's only once we see actual liquidity and then the impact of that will be felt upon. Very biased towards softening of yield, and I think that will happen once the liquidity comes in.
Some who are still bullish and who've been bullish for a while have linked the outcome of efforts to sort of straighten out the entire NPA issue at banks as the swing factor, which will over the next couple of months determine whether they remain bullish or they change their view. Would you agree with that kind of an assessment? I know it's many things which go into making a view, but this at the margin may stand out as the most important. Resolving the NPL issue at banks. I mean, we also at the margin at the bankruptcy code and works. But that's still, even if passed by the Rajya Sabha, is still a couple of years out in terms of implementation. But there are other things which the government has been proactively doing, and the RBI as well.
Yeah, that's true. So, I think one was recognizing the NPL as we come to get to know more cleaning up once recognizing is done. And I think from enforcement perspective, banks are getting after the people, and so therefore people who are sitting at the margin, definitely their money will flow through in with the banking, so it may not be that bad. Whereas there are certain things which cyclical stock or it was like completely willful. That's going to take time. I personally think that address will come only as we expand and as the percentage of NPA come down. So it will come through denominator going up rather than resolution. Bankruptcy code, very much welcome. It's very good. But the only problem there is I don't think it helps you with the as the draft which I read 3 months back. It does not really help you for the past loans at this juncture. particularly if it is siphoning of money and all that. It looks back at 3 years. But hopefully that's going to at least keep the pressure mounting on, and that's what is happening even on this. I was talking about currency washing, which was happening black to white and white to black. That's also become difficult. So I think it's not going to be easy cakewalk where people would say like I could manage the system, and I think that's a pretty good thing, right? So in a way, yes, that will have some pains in the beginning. Some people will kind of make noise about it, but at the end of the day, it's going to be pretty good for the country. So I think we are on the right path. We will have to go through some pains in between, but I'm extremely very positive things happening. You must have read the tax data, right? The income tax data. Come on, this was a complete joke, right? Like the amount of people paying tax or showing taxable income, that was completely joke, right? So I think we need to really get that widening of tax base, and that's what the focus. There is a focus there. Now, how fast they implement that, let's see.
Jayesh, thanks very much. Good speaking with you as always. Appreciate you coming on with that perspective today.